Hello everyone, welcome back to the channel. Today I want to talk about something that I am sure many of you might have been questioning. The question is simple. There is a war going on between US and Iran. West Asia is in the middle of a serious conflict and the oil prices are rising. You will agree that the present situation is very tense. And yet gold, which is supposed to be the safest asset in the world during a crisis, is actually falling in price. Gold was at around rupees 1.7 lakhs per 10 grams in early March 2026. Today it is sitting somewhere around 1.62 lakhs per 10 grams. There is a fall of roughly 7 to 8% in about 3 weeks time. When we hear about a war-like situation, we expect gold price to shoot up, right? Instead, this time it has gone the other way. The gold price is falling. So the question is, what is happening? I will try to explain the situation in this video. Let's first understand why we buy gold in the first place. Beyond the cultural value that we have for gold, there is also a financial logic to investing in gold. The logic is this: when the world becomes uncertain, currencies are losing value, the stock markets are falling, gold tends to hold its value during such problematic times. This is why we often refer gold as the safe haven asset. And historically, the logic of investing in gold has been found to be true. During 2008 financial crisis, gold went up. During COVID in 2020, gold went up. During the Russia-Ukraine war in 2022, gold went up. So now, when a major conflict breaks out between the US and Iran in 2026, it is completely natural to expect the same thing to happen, but it has not. So what is the reason? The reason is that gold price does not respond to just one factor. It responds to multiple factors at the same time. And right now, some of those factors are working strongly against the gold, and these factors are so strong that even a war scenario is not able to support the gold price. Let me take you through these factors one by one. Reason number one: the war has pushed oil prices up. And that is actually bad news for gold right now. When US-Iran conflict escalated, oil prices shot up sharply. This was expected because Iran is one of the world's major oil producers, and any conflict in Gulf region raises fears about oil supply getting disrupted. Higher oil prices means higher cost for everything: petrol, diesel, transport, manufacturing, food, etc. In short, it means inflation rate going up. Now, here is where it connects to the gold. When inflation is high, RBI has to think very carefully before adjusting the interest rates. But more than the action of our RBI, gold price is more sensitive to the action of US Federal Reserves. Throughout 2025, investors all over the world were hoping and expecting that US Fed would start cutting the interest rates. This expectation was one of the big reasons gold has been rising so strongly till date. Why? Because lower US interest rates would have made gold more attractive for the investor. Instead of investing in US bonds, investors would have diverted their money to gold for better returns. But now, with oil prices rising and inflationary fears coming back, those expectations are being pushed back. Under inflationary concerns, Fed is unlikely to reduce the interest rates. Every time investors see an environment of interest rates going up, gold prices fall. Let's understand it in more depth how inflation and interest rates affect gold prices across the world. We know that gold does not pay us any interest. Suppose you have rupees 10 lakhs to invest. On one hand, you can put it in fixed deposit with a good bank and earn an interest at about 6.5% per year. This 10 lakh FD can earn you a guaranteed interest each year of about 65,000 rupees. Now on the other hand, what will happen if you buy gold worth 10 lakhs? Your stock of gold can fetch you no dividend, no interest, nothing. You are simply holding and hoping that the price of gold goes up. This sounds simple and logical right now, But imagine yourself with those 10 lakhs and rupees 70,000 interest earnings. That additional cash flow is a great emotional comforter. Moreover, you can also reinvest those extra cash flows for better returns. Now in this frame of mind, suppose the interest rates goes up. In this situation, the fixed deposit option looks even more attractive. When interest rates go up, large institutional investors who manage thousands of crores of rupees start moving a part of their money from gold towards interest bearing assets like bonds or bank FDs. This is not a small amount we are talking about. When global funds shift even a small percentage of their allocation, it moves markets significantly because their cumulative small percentages is also worth thousands of crores. This is exactly what is happening right now. US interest rates are not going to fall now due to oil inflationary concerns. In this case, the opportunity cost of holding gold will be too high. Now, in this situation, some investors would delay their plan to buy gold. Some investors might even sell gold to buy high interest bearing bonds or FDs. This is what is causing gold price to fall even in a war stricken world. Now, reason number 2, US dollar has become stronger and strong dollar puts direct pressure on gold. This is a point that many people in India may not relate to completely because domestically we do buy and sell gold only in Indian rupees. But gold is priced globally in US dollars. Even when we buy gold in India and pay in rupees, the underlying price of gold is determined in US dollars in the international market. So, when the US dollars become strong, the price of gold in USD often falls. Why is this? Because when the US dollar is strong, global investors, say from Europe, from China, India, Middle East, find gold more expensive in their own currency. Hence, the demand for gold falls and its price moves downward. Now let's also understand why is the US dollar getting stronger. When the US interest rates are expected to stay high, investors from all over the world move their money into US bonds to earn higher returns. US bonds are considered safest asset as of date. US bonds can be purchased only in US dollars. It means the demand for US dollars goes up and more demand for US dollars makes the dollar stronger. So you can see this chain. Oil price rise, the inflation rises, the Fed increases the interest rates, people start buying more US bonds. This makes the US dollar stronger. A stronger US dollar lowers the demand for gold and lower demand forces the gold price to fall. This is what is happening right now even in a war-like situation. So you can see oil price inflation is causing gold price to fall. Now the question I know many of you are really asking, should we be worried about our gold holdings? My honest answer is no. Not if you are a long-term investor. Let me tell you why. The correction we are seeing right now from around 1.7 lakhs to around 1.6 lakhs level is a 7 to 8% price fall. It feels significant now because it has happened so quickly. But in the context of where gold has fell from, I still think that it is well within the range of a normal and healthy correction. More importantly, the reason that drove gold higher are still very much in place. Central banks across the world, including our RBI, have been buying gold aggressively over the last 2 or 3 years. This is a structural shift that is happening with all major economies of the world. These days, countries like India, China, Germany, etc. want to reduce the US dollar dependency, and gold is what is replacing the US dollar reserves. I don't think that this US dollar to gold shift trend is going to reverse. Moreover, global uncertainty is not going away. Russia-Ukraine war is not stopping. Iran is not going to forget the US attack anytime soon. This will have serious effect on crude oil and gas prices. In long term, these will in turn push more people away from the US dollar and towards gold. In this situation, gold remains one of the most reliable long-term stores of value. This narrative is not going to go away anytime soon. In fact, it will become stronger and stronger as people like Donald Trump stays in the helm of affairs. What does this mean for people like us? If you are already invested in gold, I think there is no reason to panic or sell. You must remember that we are holding a long-term asset. Short-term corrections of 7 to 10% are part of normal cycles. If you have been waiting to add gold to your portfolio and felt that the price was too high at 1.7 lakhs level, the current correction to around 1.6 lakhs level is worth paying attention, right? Though I would personally wait for the gold price to dip even lower to about 1.4 lakhs level.